ASEAN needs over $1 trillion to decarbonize by 2030, but its green finance market is only at $36 billion today, revealing a major funding gap. Oliver Wyman Sam Ridgeway is here to tell us more. Sam, what has changed in the way banks approach green finance?
Banks have been doing a wonderful job the last few years with growing their green finance. They've been setting targets to give more green lending to customers, and they've been beating their targets, which has been incentivizing them to ratchet them up even further. They've been doing this both in the typical areas you might think of, such as financing green technologies and green projects, so renewables and others, for instance. They've also been getting increasingly creative with the ways that they're setting up green loan programs and products. For instance, they're connecting together different customers. So a company which wants to put solar panels on the roof, they're connecting them with installation companies who can come and put those solar panels in place, and they finance the entire project. So there's been a lot of innovation.
But given this, what limits banks from reducing green loan margins?
So at the moment, the issue is that a small discount is often given on green loans, and that discount is coming directly out of the bank's profits as of right now. So that discount is typically measured in low double digits or maybe even single digits of basis points. And that's entirely because the cost of funding for the green loans is not meaningfully different to the cost of funding of a conventional loan, meaning, as I already said, that the discount is coming directly from a bank's profitability.
Aside from what you've just mentioned, Sam, is there any way for banks to make green finance more affordable?
So this is where the innovation we think needs to happen on the liability side of the bank's balance sheet and in the structuring of green loan projects. At the moment, the cost of funding for a green loan is not meaningfully different to the cost of funding for a conventional loan that a bank offers. And that's, as I already answered in the previous question, why banks are currently essentially giving a discount out of their own profits to their customers. We think by having some innovation on the liability side, creating specific green liabilities or other structures could systematically lower the cost of funding for green loans. And this would allow banks to pass on a meaningful discount to their customers taking green loans. So for instance, in the liability side, if one could come up with a structure such as a green covered bond in which you collateralize the bond with a pool of green loans, you would structurally decrease the risk of that covered bond versus the bank's unsecured debt. And you could pass on that structural discount through to those green loans that are part of the collateral pool. You could also set up other structuring ideas such as guarantees issued by governments for pools of green loans, or such as blended finance, in order to structurally change the risk characteristic of green loans. All of this innovation would allow you to de-risk and therefore lower the pricing of either the liability to pass on to the green loans or directly the green loan. In summary, we think that whilst there has been a lot of innovation on the asset side for banks currently, and they've been doing a wonderful job in increasing the amount of green lending they're giving, we think that by now focusing also on the liability side, you could structurally change the pricing that you're able to offer. And in doing so, hopefully accelerate the offering of green loans by incentivizing more customers to take them based on the pricing as well as on other characteristics. And in doing so, we can accelerate the adoption of green technologies and hopefully accelerate the transition to net zero in the whole economy.
Thank you so much for the recommendations and for joining us today, Sam.
You're welcome. Thank you, sis.
Once again, that was Sam Ridgeway, Principal at Oliver Wyman Singapore. For more news, visit AsianBankingandFinance.net.